give you that markets update now. The local bourse is in for a gloomy day today as the new COVID-19 cases in mainland China weighed on markets, including Tencent, which influences the JSE via Naspers and Prosus. At the same time, global markets await the results of the U.S. midterm elections. Jimmy Moyaha, independent markets analyst, joining us now for the latest developments at the JSE. Jimmy, good morning to you, sir. Give us your quick overview of the overall markets and how they're looking this morning after closing weaker on Tuesday.
Morning, Colin. Morning to our listeners. The markets have opened rather flat. We've seen that the top 40s opened slightly to the positive, just about 0.5%. We have got some markets trading in the green. Most notably, of course, is Goldfields at the moment. But we've got other markets like Sibanye also trading up about 3% in early trade. You've got other guys like Anglo also trading up in early trade. I think the sentiment at the moment around markets is largely focused around the concerns that we're seeing from the Chinese demand side of things with the potential of new lockdowns. We do know that that's going to have a spillover effect on other markets. And we're also seeing some concerns or early concerns at this stage around what could potentially be happening in Europe come December with the Russian oil bans that are set to kick in.
Let's talk commodities. Oil prices mostly unchanged in early trade this morning after sliding 3% in the previous session. Talk us through the factors influencing trade there.
Absolutely. OPEC has announced, of course, that they are looking to cut output. But as I mentioned earlier, we know that we have those bans coming in, or those embargoes coming in on Russian oil from Europe come December, and so there's concerns around that. But that's all coupled with the fact that there are growing concerns around demand for oil as China looks to potentially head back into lockdowns or adjust the severity of their lockdowns, and that's obviously going to have a dampener on the global demand, given that China is such a large consumer or such a large importer of oil. So the concerns there are rightly from both a demand perspective, but also you see that OPEC Plus is looking to control that price and maintain the price levels where they are. We know that oil's been edging closer to that $100 a barrel mark. It's currently sitting at around $94, $95 there. So they're going to look to maintain that price stability, and they've announced that they're looking to output cuts in order to maintain that. So that's not boding well for the European energy crisis that could potentially be looming come November, December as they go into their winter. But we'll have to wait and see how that's going to affect them, particularly with, as I mentioned, those oil embargoes on Russian oil.
Let's talk company news. Goldfields announcing the termination of its agreement with Yanama. How are investors likely to react?
Well, so far we've seen a lot of positive sentiment from investors. We know that when the initial announcement was made that there was an alternative offer on the table, we saw the Goldfields share price do really well on that day. We've seen that the Goldfields share price at the moment is trading at about 173 Rand a share, up from about 150 Rand where it's been sitting for a large part of the deal. Investors are very happy that Goldfields didn't enter into a bidding war. There is, of course, that $300 million break fee that Goldfields has now activated as a result of the recommendation from the Yamana board to go with the alternative offer that's on the table. So they're expecting that, from Goldfields' perspective, they're saying that $300 million break fee should be paid within the next, I believe it's the next 2 business days from when they activated that clause. It remains to be seen if that's going to go ahead, or if the Yamana team are going to change their minds again. It's unlikely that they will, but at this stage, that'll be something that the Goldfields investors are quite happy with. Goldfields has managed this transaction or this offer from their perspective quite well, and their shareholders are very happy with that at this stage.
Let's conclude the conversation with the Tesla Chief Executive Officer. That's someone the world has been talking about. Elon Musk, he has sold at least $3.95 billion of the electric vehicle maker's shares just days after closing his buyout of Twitter. Was this planned, Jimmy?
Absolutely. Elon Musk had, in terms of financing the entire $44 billion for the transaction, I think he had gotten about $13 billion in debt commitments from various banks, including Barclays, including Morgan Stanley, and in addition to that, he had some private investment. But the bulk of the transaction, about 25 to $27 billion of that, he was funding from his own pocket. Initially, he had looked at financing it through sort of loans that he would take out against his Tesla holdings, but we've since seen that he has sold about $15.5 billion of Tesla shares. He's planning to continue selling, but it looks as though I think of the entire 27 odd billion, probably about 25 billion is coming from the sale of Tesla shares. So this is not a surprising move. This is something that has been in the works for quite some time, and he's looking to finance his portion of it in terms of or in cash rather than in debt.
Yeah. Here's a side one, Jimmy. You probably didn't anticipate it. Is it clear what Elon Musk wants to do with Twitter?
No, it's not. And I say that because he started out when he took over Twitter mentioning that he'd look to have the blue tick feature, a paid feature. Recently, there's been conversations around putting the whole of Twitter as a platform behind a paywall. So effectively, you pay for the entire service or the entire platform. At this stage, nobody knows what Elon plans to do with Twitter. And I suppose that's the benefit of a private company, is that the share price is not going to be affected in any way. It remains to be seen whether his plans for Twitter will be received well by the users of Twitter and whether or not they'll continue to use it depending on what he outlines. So at this stage, no clear, concrete plans. There's a variation of different options that are on the table. But I think the common ground or the commonality around all of these options is he wants to monetize the platform in some way, shape, or form in order to most likely recover some of the investment that he's putting into it.
Jimmy Moyaha, independent markets analyst, thank you very much for your time and indeed that markets update.